issue because these headlines moved a short time ago with the big question, are these supply problems going to be much worse than expected? So Kovac is here. TFI International Securities, okay? Widely followed analyst there says shipments will be 15 to 20 million units less than expected with significant downside risks. We're talking about the 14 and the 14 Pro. We've gotten headlines like
Pro
this.
and the Pro Max.
And the Pro Max, thank you.
Yeah.
So what do we know about this? I mean, TFI International Securities.
Well, he's independent now, actually. He's formerly, but yes.
Oh, formerly,
so,
yeah.
Yeah, so
okay.
Ming-Chi Kuo,
formerly known as.
He is the killer Apple analyst. He's really good at, or probably the best in my opinion. I always pay attention to what he says because he predicts what Apple's going to do like a year in advance before they actually do it.
Okay, so this is legit. When this analyst says it, he's plugged in.
Yes.
What do we make of this?
Especially to the supply chain. He's based in Taiwan. So
what do we make of it?
His forecasts are much lower. I'm reading the entire Medium post that he posted on this right now. He's predicting 70 to 75 million total handsets. Now, keep in mind, when this quarter started, Scott, most analysts were predicting 90 million handsets for Apple, which would have been flat. But they're counting on these Pros kind of making up for the revenue because the Pros are actually in higher demand than the regular 14. So they have that higher selling price. And that's what people were really banking on and Apple was banking on to meet its revenue growth targets for the quarter. Now, if this is true and it's, way below that 90 million, plus you can't just walk into a store and get an iPhone. You can't get one in time for Christmas even. So it looks like he's also saying he doesn't think it will go into January. The demand, if people can't get it in time for Christmas, they're not going to try it in January, which would be interesting and unique for the Apple customer.
It sounds surprising to somebody like you who covers this company closer than anybody else?
Well, not surprising in the context of what we saw coming, those pictures we saw coming out of China last week. We still don't really know the full impact of those protests yet, right? We know that it's halted production. We know the initial shutdown slowed things down, and Apple had to give that warning several weeks ago. And then we had these protests, which apparently are making things worse. Now, look, I've been asking Apple every day about this. What's the latest? What's the latest? What's the latest? We haven't heard anything from Apple since last Wednesday evening when they said, look, we got people on the ground in Foxconn. We're monitoring the situation, but no update to its statement a few weeks ago when they said, look, the iPhone, we're going to sell fewer of these phones than we thought. That's all they've said so far.
Maybe they haven't said much because they just don't know. I mean, it sounds like it's so fluid with everything that, you get these kinds of forecasts. They're not exactly sure what the numbers are. But Josh, Barclays today is kind of in line with what we're hearing from Kovac in this new report from this influential analyst. They expect 15 million shortfall, increasingly a risk for downside to 20 million shortfall. So we're talking about similar numbers, at least on the headline. But as you heard Steve say, under the surface, it sounds potentially much worse.
I guess my question for you would be, here are two questions.
Yeah.
The first is Apple has been very deliberately trying to downplay the meaningfulness of how many phones they're selling in any particular quarter.
They've done that for years now.
They've done that for years now. Whether or not we all, as the Wall Street community, decide to go along with that is a different question. But assuming that's the case, and Apple can steer the conversation toward, look, we will eventually sell these units, just might not get sold in December, maybe January, February. How much impact historically has something like that really had on the stock? I would argue not much. Number two, how much are we already discounting this? Apple is underperforming the S&P 500, down 18% versus 16%. Historically, it doesn't do that in a bad tape. Apple's usually one of those names that holds up better. So aren't we already pricing in some of this volatility in shipments when we look at where the stock is year to date?
And we saw that move yesterday, right? When it was down 2.5%. What's it down now? About 1.5%. So it might already be priced in now. So when we get these results, at the end of January, it won't be as much of a surprise potentially.
I think that's historically been like the right case.
So what do we do with this, Steph? There's also a note from Wolf Research today on the technicals, which suggests that Apple looks poised to revisit the key 135 support level. I bring all this up because we're having conversations every day about where's this rally, right? Where's the end of the year rally that you keep hearing predictions about? Oh, it's going to arrive, seasonality, don't worry about it. Santa Claus is going to show up. If Apple does test some technical levels around 135, if it even breaches that level, Where's that rally going?
Yeah, I mean, we can slosh around for a bit, right? We've been in a trading range all year long.
Well, I'm talking about for the last, 5 weeks of the year. We're going to slosh around more?
I still think we could kind of trend higher, but I don't see new highs by any means. So it's like 4,200 on the upside, maybe 39 on the downside. I think we trade in a range.
New highs? What do you think? I wasn't talking about going to 4,800, Steph, in the next 5 weeks.
I'm saying trading range. We could rally between now and the end of the year, but it's probably capped at about 4,200 on the upside, and on the downside it's about 3,900, and that's because of this whole inflation problem and Fed problem. So that's not going away anytime soon. And yeah, I was very encouraged, by the way, of the Case-Shiller numbers today, falling for the third home prices, falling for the third consecutive month. That's really good news. And CPIs and PPIs are rolling over, certainly, but inflation on an absolute basis remains very, very high. So that's why I think we're going to be in a trading range. Now, to Apple, it's 7% of the S&P 500. I'm 1% weighted in this name in one portfolio out of 3 that I run. And I haven't been excited about Apple because they have issues. It's not just China, though, Steve, right? I mean, this is a timing issue. This is a supply issue versus a demand issue.
Right.
We know there is demand, so I think people will look through it. What I have a problem with is it's a stay-at-home beneficiary.